All right, traders, within this video, we're going to be doing a stock market price action analysis on where I think SPY is heading. This is going to give you a much better understanding, a great perspective on when to be long biased and when to be short biased for the stock market. So let's get right into the analysis. So for those of you who've been following this series, you are well aware that I ended up buying put options on last Thursday, and I am expecting a stock market crash of 5 to 8% by the end of September. I think SPY is due for a pullback of around $440, right around that range. And within this video, it's really going to go over the price action on when to be long biased and when to be short biased. So in terms of the puts that I ended up buying on Friday, and I really do encourage you to go back and watch my previous videos on the stock market crash series, because it gives you a better understanding on the trade, why I'm taking this risk, and it gives you a perspective on the strategy that I'm using in terms of history repeating itself. Historically has been the worst month. September historically has been the worst month for the stock market, and I'll be going more into that towards the end of this video. So let's get right into it. So in terms of the put options that I bought, this is the main one. I also have a much smaller position on ones that expire this week, but let's just get right into it. So this is going to be the main option play. It's a $448 put option. So in terms of options, I tend to stay in the money. I really prefer to stay in the money. Sometimes I'll go out of money. In this particular situation, I am going to go out of money. But with options, I really do encourage you to focus on staying in the money. It's a lot easier, in my opinion, to make money that way. But let's just get right into it. So I went with the $448 strike. It expires September 20th. I have 30 contracts at an average cost of $2.71. I'm currently down 9%. So that's the contract that I ended up buying. Now let's get into the price action analysis. So in terms of one of the strategies, one of the things that I was looking at is in terms of history, like I said, September has been historically proven the worst month for the stock market. Just to show you what happened in terms of last year of 2020, we had this nice ramp up for new all-time highs. Keyhole round number in the 350s is where SPY topped, and it was on September 2nd. Ever since after September 2nd, it went from 350s all the way down to $321. So over a 10% crash right before September ended, right? And you could see it had some huge downside potential for the short term being as well. So that's kind of that pattern. That's kind of the history that I was looking at. Now, in terms of the price action and in terms of what we're going to be looking at for this week. So SPY has been trading in this channel. Let's go over this channel right here. This is going to show you on when to be long biased and when to be short biased for SPY using these unique gap strategies. So let's get right into it. So first things first, I'm going to draw some trend lines on the key levels you're going to want to watch for this week. This is going to be a key level right here. We're going to call it 450.25. And then this is going to be a key level here. We're going to call it 454. That's your zone. Think of that as your overall zone. So SPY has pretty much been continuously trading, throughout the past 5 days in between this support range of 450.80 all the way to $454, right? So that's your overall support and your overall resistance. So if SPY can break out past 454 and turn that into a support level once it pulls back, it is going to be on track to hit $458. So the bulls will take complete control of this channel if SPY can break out past 454, and then once it has its pullback, turn it into a support level, then it'll be on track to hit $458. Now, in terms of the bears taking control, the bears need to quickly fill this gap early this week, early into the week, by Wednesday ideally. They need to close this gap at 450.25. If they can fill that gap at 450.25, they'll have a great chance of taking control. And then once that level cracks, it's going to bounce at some points. Once it bounces, it needs to turn that gap level, waiting to fill that 450.25 level, that key support level, into a resistance level. If that can happen, the bears are going to be in complete control, and it's going to be on track to close to fill this next gap right here at $446.26, which is going to be a key level to take profits in terms of these put options. So those are going to be your key levels for this week. That is what you want to watch for in terms of the breakout and in terms of the bulls taking control. 454 needs to act as a support level once it breaks out. In terms of the bears taking complete control, 450.25 needs to act as a resistance level once it cracks. Now, just to give you an update on the price action in between, so that's the key price levels of this price channel that we've been trading in for the past 5 days. As of now, SPY, so what did it end up doing? We were expecting a red day on Friday, and we wore red. This opened up red before it hit its new all-time high in the pre-market. And, after it hits its new all-time high in the pre-market, this did open up red. And in terms of how low it did start to crack a key support level. We got some key support in between that price channel, and that key support is going to be right around 450, 190, 452, right around that level. Did start to crack. However, it did recover. You'll see that happen a lot where stocks and the market tends to recover once it has a pullback at around like 10 a.m. You'll see that trend reversal happen a lot. However, this is selling off during after hours. So that's a good sign that the bears are really trying to take control. So we're in a battle zone, and that key battle zone in terms of the middle price action is going to be like 450, 150, 452 to 450, 350, right around there. So it is a battle right now, and the bulls are really trying to win this battle. And like I said, it's extremely hard to time a market crash. This is something, I learned a lot from, getting hurt very, very badly in 2020 by getting puts on SPY. But I've learned a lot from it, and this is a very rare play, and this is something I rarely do, and I wanted to take a shot on it because I think the odds and the history is in my favor. And if not, then I put in what I'm going to risk, and I'll have to accept my loss. In terms of my max risk is going to be like 50%. So it is what it is. So yeah, guys, that's the particular play. That's the particular situation we're looking at for SPY. Those are the key levels I would focus on. It is going to be quite the battle. So we'll see how it reacts. We'll see how it goes in terms of tomorrow and the rest of this week. So yeah, that's my update on SPY.